Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. And on today's show, we welcome Justin Smyth, who's a trader and is the editor and publisher at nextbigtrade.com. How are you today, Justin?
I'm doing great, Karema, and thanks for having me back on the show.
Well, let's begin by talking about your journey into trading and how you began. It'd be interesting to find out what led your interest within the financial markets. And have you always been interested in trading from an early age? Give us a brief overview.
That's a great question. Actually, my initial interest in the markets actually occurred when I was given a savings account by my parents when I was a young kid. And after seeing what happened after I deposited money into the account and earned interest for having money in there, I thought it was really neat because I wasn't really doing anything with the money, but I was building my account by just investing the money. So from there, I actually went in high school and started reading the business section of my newspaper. And I'm 40 years old, so this was in the mid 90s, when like newspapers and magazines were more popular than obviously the internet wasn't out yet. But so I actually started getting involved with mutual funds and stocks at the end of high school and into early college years. And this was during the tech bubble. So I made some money in the technology, and then I ended up losing it because I wasn't really well versed in the market yet. And from there, I've just continued to grow my interest in trading. And I, after that happened, I really went on the education kind of part of my, adventure, where I started reading a ton of trading books and trying to figure out what trading was all about.
Okay, and today I know you have a particular trading strategy that you use, and before the call we were talking about this. It's a trader called Stan Weinstein, and so can you just sort of briefly go over the basics of his strategy and why it's effective for picking out correct sectors or stocks within an uptrend, and perhaps the relationship between stage analysis and volume when analyzing a stock?
Sure. So that was definitely a pivotal book that I read while I was reading a lot about investing, was Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets. And stage analysis is basically a trend following based system. It answers a lot of simple questions that are important to understand in the markets. It lets you understand what things are in uptrends and downtrends, what sectors and stocks to focus on. And it's a fully fledged trading system. So it gives you buy and sell signals based on how the system works. So the system uses weekly price action and volume to understand the stages of the market. And basically all markets go through 4 stages. There's a stage 1 basing phase, a stage 2 uptrend, or otherwise known as a bull market, a stage 3 topping phase, and then a stage 4 downtrend or bear market. So at any given time, all markets are in one of these 4 stages. And what you do with stage analysis is you take a top-down approach, and first you want to understand what the major indexes are doing. So you want to know what stage the S&P 500 is in, what stage the NASDAQ is in. If you're looking at commodities, you want to know what stage gold is in, oil. You can use stage analysis on really any market that has weekly price data and volume. In that top-down approach, then you kind of break it down into sectors. You want to look at what sectors are in uptrends, what sectors are breaking out of stage 1 bases, and then you go down to individual stocks to kind of finish off the analysis and try to select the best stocks in the market. Now, what you're looking for in stage analysis when you're looking for things to buy is stage 2 breakouts. And what a stage 2 breakout is a breakout of a stage 1 base on a big increase in volume. Now, volume is critical because volume really gives you a look into the supply and demand that's going on in the market. Now, if you were to walk into like Goldman Sachs or JP Morgan and try to ask them what they're buying or selling, or any financial institution, they'll probably just laugh at you and they wouldn't be interested in that question really. But the volume though gives you an indication of what the big money is doing in the market. So it's really your window into seeing what the big players are doing. And this is important because especially for retail investors or even like smaller fund managers, like their actions aren't really going to influence the market as much as the big money. So the volume lets you understand what they're buying and selling. So that's really one of the main things that I scan for when I'm looking for these stage 2 breakouts. And I want to see the bigger the volume, the better. Stan Weinstein says that directly in his book, is that, you want to look for the most powerful stage 2 breakouts. I want to give you a quick example of gold, because I know your listeners are very interested in gold from a stage analysis perspective. So really what's happened with gold since, the last 10 years, you saw a big stage 2 bull market in gold from 2009 to 2011. Then we saw a stage 3 top into 2012, which ultimately led to a stage 4 downtrend in gold into around 2015. Then we got a stage 2 breakout in 2016, but that ultimately failed and gold moved back into a stage 1 base. The stage 1 base continued until the middle of 2019 last year, when we saw a stage 2 breakout in gold again on big volume, and gold's been in a stage 2 uptrend since about June 2019.
Very interesting. Okay, well, let's talk a little bit about following the price action and the volume. And I imagine some investors would suggest that you follow this analysis, then you'll actually be buying at a far higher price than if you'd bought when the stock was perhaps doing nothing for years. So then you could perhaps miss out on maybe a double even before getting positioned. I guess a lot of value investors would find Stan Weinstein's strategy a case of buying high and then selling a lot higher. I guess a lot of investors have trouble buying something that's already gone up a little bit before.
Yeah, that's definitely true. You're not trying to pick the bottom with stage analysis. There's a couple of problems with trying to pick the bottom, though, in any market. One of the things that is interesting about stage analysis is it defines the stage 1 base as a time period in the market where you don't want to be invested either. And the problem with what happens after a stage 4 downtrend is that there's a lot of overhead resistance, because people that are still holding something that went through a bear market, whenever the market moves back up, they want to get out and try to get back to even or just salvage some of the money that they've lost in a bear market. So that provides overhead selling pressure that doesn't really go away for, a long period of time in a lot of cases. If you look at gold, for example, after the bear market in 2013, it's taken gold many years to really form the stage 1 base and then clear out some of the overhead selling pressure so that it can actually move higher. So stage analysis really defines this period where, even though the market might be low, you want to still avoid this time period until you get the breakout, but you are going to give up the bottom. But again, what happens typically is when one market's in stage 1 and just really going nowhere, other markets might be doing well. So you want to just shift your focus and kind of focus on markets that are breaking out in the stage 2 or that are in healthy uptrends. And another thing to think about when you're thinking about value investing is that, the easiest way to lose a lot of money in the market is to buy something that's in a downtrend and then keep adding to it, but the market remains in a downtrend. So one of the ways that stage analysis keeps you safe in your trading is that it tells you to avoid downtrends, basically. That's the number one rule in stage analysis, is to avoid stage 4 downtrends. So that's the way you minimize losses and free up your capital to invest in markets that are going up. So yeah, that's, again, you're not going to catch the bottom, but you're not going to give up the opportunity cost of markets that are going nowhere, and you're not going to lose money because you're not going to be in markets that are going down.
Okay, very good. Let's go through a few of those winners over the last couple of years that you've traded in and what sectors look bullish to you now. Before the call, we were talking a little bit about Tesla, and I know you've been following that for a while, and recently it has broken out and is climbing higher from a long-term base. So talk to us about that, and perhaps the precious metals. You mentioned gold. How is silver doing in your opinion?
Yeah, so Tesla has been an interesting stock since the stage 2 breakout in October of last year. I think they put out an earnings release that kind of surprised the market, and the stock went up dramatically on a big increase in volume, went above resistance, and that's a stage 2 breakout signal. So I got involved with that stock back then, and I wrote an article on my website about it too, if you're interested. But that stock's been in stage 2 since then, and it's kind of like we talked about earlier about there was an article today in the British papers about whether it's too late to buy Tesla or not. Well, Tesla now is a little bit extended from its 30-week moving average and is probably not a safe buy, in my opinion, at this point. But if you were following stage analysis, then you would have been at a better point to buy it back, a few months ago. But yeah, there's been some other stocks recently, like Luckin Coffee is another stage 2 stock that's been a big winner recently. Obviously, like turning back to gold and silver, really the biggest part of the stage 2 move that was profitable that I traded in gold and silver recently was the move from June 2019 till about September, where you had 2 or 3 months of a strong uptrend, and then gold and silver have been consolidating pretty much sideways since then, since September of last year. Now, some mining stocks have continued the uptrend, but it hasn't been really an across the board thing like it was in the early part of the uptrend. So right now we're kind of just looking for gold and silver to make this stage 2 continuation breakout and continue the uptrend. So I'm paying attention to gold and silver. Obviously, most markets right now are honestly in stage 2 after this kind of long sideways kind of a mini bear market in 2018. A lot of things have started breaking out. You've seen these growth stocks like Tesla, Luckin Coffee, some other stocks breaking out. So there's quite a few things that are moving higher. The market overall, I think, is a little bit extended right now, though, and I'm thinking we're going to have a pullback probably within the next month or two.
Excellent. So let's talk a little bit about financial books. As you mentioned earlier, you were reading as many finance books as possible, but you also wrote an article a few weeks ago talking about the fact that reading so many books probably doesn't help you in the long run. Can you talk about that and why you reread your favorites every year?
Yeah, this is something interesting to think about. Obviously, reading new books is fun and getting more information and learning new things. The thing about trading, though, is that trading is a very emotional kind of experience, and you have to have good discipline and I think a well-defined trading system to really be successful in the markets. And if you read a lot of trading books, there's a lot of good information out there, but it might actually confuse you more, and you might kind of drift from your system if you are constantly exposing yourself to different ideas and different opinions from other people. So another thing to think about is that when you come across a great trading book, if you just read it one time, you might not be necessarily absorbing all the good information that's really in there. So going back and reading some of the great books multiple times, I think will really kind of let you really deeply understand the material and absorb it and use it. So kind of what I've done is I used to, when I was kind of more in my early education phase, I would just buy new books all the time and read them and learn about all kinds of different things in the markets. But after doing that and after reading a lot of books, what I've done recently is just kind of pare down what I read to just the core books that I consider the most important books. And they're, around the trading system I use. So that's really what I do. And I again, if you're I think in that article that I wrote, I talked about if you're a professional baseball pitcher, or if you're a golfer, you don't change your swing or your wind up from week to week and get exposed to all these different ideas. What you do is kind of refine your process and focus on that and try to be the best you be at what you do. So that's kind of what I'm trying to do with stage analysis is really focus on that and become the best trader I can be with that system.
Yeah, and I think it's interesting. In that article, you also mentioned Jesse Livermore and how he read the tape back in the 1930s and 1920s. And it occurs to me that things haven't really changed much in terms of reading the tape. And then today we're just reading the volume for stocks.
Oh yeah, it's kind of amazing. You've read some of these classic books, especially Jesse Livermore. He talked about reading the tape, which is he didn't really have electronic charts like we have now. So I'm sure he'd be using those if he lived now, but he read the tape, read price action. And in that book, he says that every time he deviated from his core strategy is when he had his big losses. Like he's very well known for going broke multiple times after making a lot of money. And every time he did that is when he deviated from his system. So he's a great example of what we just talked about, how he had a core strategy that worked, but what got him in trouble was deviating from that. So I'm trying to do the same thing with stage analysis. I think this is a system that works, and I want to focus on that and try to minimize, other things that can get me in trouble.
Okay, as we begin to wrap up, Justin, is there anything else you'd like to share with us today? And are there any other markets that you're keeping an eye on? One that's occurred to me that we talked about a few years ago with Colin was the uranium market. And there have been moments over the last couple of years where it's looked as though the spot price and the juniors were ready to break out. However, in hindsight, we've always seen so far is a series of false breakouts, even though the fundamentals for the sector appear to get better and better. So could you talk about uranium as well, briefly?
Sure. Yeah. Uranium has been definitely a frustrating sector for longs. Like I've tried to buy a few breakouts in uranium stocks over the last couple of years. And like you said, most of them have failed. So yeah, we're really just in a long-term kind of a sideways to lower grind in uranium that just hasn't been able to break back out into a bull market that people are expecting. So I would, again, like with the stage analysis system, I think it's a good example of getting out of that market when it's not behaving right. And then if you see it start to act well again, I think that's when you want to jump in again. So I think gold is in a lot better position right now than uranium because gold's in a stage 2 uptrend. But again, you never know what's going to happen. Like last year, I was kind of surprised to be getting involved in the gold again based on what happened in June. But I saw the big breakout on volume, and it's really what got me back in the sector. So as far as what's going to happen the rest of the year, I mean, really, I'm just going to keep watching the charts and seeing what things are breaking out and try to be involved in them. And then, be on the lookout for the periodic corrections in the market and try to raise a little cash when those happen too. So that's really what I'm trying to do this year.
Okay, well, many thanks again for being on the show, Justin, and I'm sure we'll have you back on later in the year.
Great. Thanks again for having me.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?